Hi, welcome to the Market Alert for Tuesday, the 14th of August 2018. So yesterday the pound sideways, no economic news yesterday. Market then putting in a sell signal, but we see the market testing and then reversing and finding support at the 127.50 level. Market moving higher. Where does it stop? Just at the 200 bar moving average, and then closes back below the daily pivot and all the way back down to the 127.50 area there, where the market is currently once again banging its head against the 200 bar moving average and also the DP level. So it's going to be interesting to see if the market can move higher from here, and the way to determine this is to have a look at the daily chart. And we certainly see we had selling on Friday, but then some buying for yesterday as well. So at the moment the prices are trading inside of the range of yesterday. That's the high and the low. So it's got to break one way or the other. So I'd certainly be keeping an eye on yesterday's high, which is here in the intraday, and also yesterday's low, which you will find down here. So there's the trading range of yesterday's market that you can see there. So it's got to do one or the other, but it's certainly got some pressure here. So the only way it can drive higher is with new buying, and selling is the easier option at the moment, given that it's bearish and the DP level and the 200 bar moving average. We could also see the market break out to the high and then come back as well. So a few options there. It's just a matter of whatever the market does is then playing the options as they actually reveal themselves. News, what have we got? Not a lot. We've just got the average earnings for the UK today at 2.5%, coming out at 2.5. Hardly news making stuff this, so again, not a lot on the news front there. Meanwhile, in the Dow for yesterday, again, let's just have a look what's going on here. We see the market move lower, then higher, and also note, let me just bring in the crosshairs here. There's an important price action here. If you look at this, you will see the volume in this bar is more or less the same, just slightly under the buying bar to the left of it. The market then does its usual trick, 76% retracement, and then we're sitting also at the DP level, and then once this is broken through the averages, the market then makes its way down, and you'll see there the market moving down 200 points before we get a bit of a bounce before the close, coming back 50% of the move there, no doubt assisted by those traders at the Fed. So overnight this market also playing with the 200 bar moving average at the moment, just trying to get above it there, and also the DP. Doesn't mean to say it will stay above this. It could trade back up to yesterday's high again. It's amazing how the high and lows of the previous day are very, very useful, and also the R1 here as well. If the market moves higher, generally 80% of the time it will stop at the R1. So again, once you use all of these tools and know how to interpret them, look at the statistics of what generally happens at these levels, forecasting where the market is going to go and where it's going to trade to isn't too difficult at all. And then combined with the bigger picture, which is the most important thing, the daily chart, you can see yesterday we have some buying pressure, the market coming off the lows, retracing 50%. So a break below the low of this bar will be very interesting indeed, because the market is likely to continue on down to the 200 bar moving average. Also on the upside, it's got the 20 bar moving average to contend with, and also yesterday's high as well. So now I know where I am in the bigger picture. Make a note of these areas, and also you can do this as well, just to mark these up, but you don't need to do that if you're looking at the intraday, because you've got these available here. So again, I'll know that there's a problem here with the R1 and also the S1 on the downside here too. And then finally in Bitcoin, as I've said for the last few weeks, this is going lower, and now we're in a critical area down at the 585 overnight, sorry, 5855 overnight. We need to break 5743, and we're going to. It's not over. There is absolutely no selling of the weak holders at all. That needs to happen. So this is down. As far as I'm concerned, I don't see this bouncing off here and going back into a bull market at all. This is sideways to lower, and once we break out of these lows here, we will see this market continue to the downside as well. And you can see we'll be going back to the lows over here down in the let's just see what the date is here. Get a rough idea. November, before the market put in its moon shoot as they call it, to 20,000, and then you'll see where we'll end up. Somewhere, I would have thought, just grab this, we've certainly got to get through this area here. If I can just click on one of these lows, 5801, I've got another one here at 5180, and then 5,000 will be sort of next on the cards. But this low over here is 2940. Whether we get down to there, who knows, but certainly the 5,000 level is an area where psychologically it would make those that have bought in at the 20,000 start to really consider their position, and if they've not got out, they'll be wishing they had. Because as I keep saying, this market is not the low isn't a climatic one. It hasn't ended with massive volume. What you're looking for is like this, but on the downside, and we're not getting it. And it will be violent as well when it actually does it. That's how it works. Same in the stock markets. March 2009, when they launched the QE. Go back and have a look at the activity around there. Bottom of the Nasdaq, and any other bull market that you've ever seen, you'll see climatic volume action around it as the big boys come in and buy up from the weak holders, from the sheep, those who can't take the pain anymore. If you don't know how the markets work, you shouldn't be trading them. That's for sure, because you will get eaten alive if you don't understand how the banks, the big money, actually trade these markets and manipulate them to try and draw in people. Like here, you're given hope. Oh, we're on the way, but all you need is a 200 bar moving average. All you need is a 76% retracement, and then you've got the market failing at these levels, and then it's back to square one. I mean, here you've got up, down 76%, but you've got the 200 bar in the way there, and also you'll have 76% areas in this area too. And that's again how you can determine where markets are likely to trade to. Okay, that will do it for this one. If there's anything to report, I will let you know. But other than that, have a great day. And as ever, thanks for watching. See you in the next one.